Next up, we're going to hear from Neometals, Michael Town.
Thank you, and good afternoon, everybody. Naturally, this is subject to the usual disclaimers, so please read that. We're a listed company on the Australian Stock Exchange. We make our living from producing lithium and titanium. Lithium is a very topical element these days, titanium less so, but I'll give you a brief overview of what we do there as a mining developer and a chemical processing company. Our key long-term strategy is to make money from our project developments and return that to our shareholders. We've delivered 2 dividends in the last 2 years and executed a share buyback in the course of that business. We're looking to make that an ongoing habit, subject, of course, to the success of our operations. Company is free of debt, has about $40 million in the bank, and is looking to that funding to support us through to the development of feasibility for lithium hydroxide production, feasibility for titanium dioxide production, and also our lithium-ion battery recycling activities. Focusing on lithium for a moment, the keys to the lithium market are all about lithium-ion battery development. And the takeaway from this is that the rapid growth in lithium-ion battery production over the last few years and rapid growth into larger scale battery cells has put a lot of stress on the lithium production industry to respond with adequate supply. It's playing a bit of catch-up and finding some of the pitfalls along the way through developing new resources. Our strategy is focused in 3 main facets. The first is lithium concentrate production, producing from lithium mines, and we have within that strategy some sub-strategies, including development from 2 and possibly 3 mines. The next plank is lithium compound production, adding value to the lithium concentrates, and the third is lithium-ion battery recycling. The schematic here is designed to show that our development path is based on the added value that we see in moving along the supply chain and in the added value associated with upgrading those products. So for a tonne of lithium concentrate, for a tonne of lithium carbonate, the value in the concentrates is probably a factor of about 1 relative to a factor of about 2 to 3 in the lithium hydroxide, and significantly higher potential for the lithium-ion battery recycling. Our upstream processing is focused on the Kalgoorlie region, which is also known as the Eastern Goldfields of Western Australia. We have Mount Marion mine has come into production in the last 12 months. It's in full production since April last year, has been exporting its product to China, where it's processed by the project partner Ganfeng Lithium. Ganfeng has a 100% offtake of the concentrate for life of mine, and it is subject to an option for Neometals to take a share of production relative to its shareholding in the mine. What our intention is there is to take that offtake and provide a secure supply chain through to lithium hydroxide production. First shareholder loans have been repaid in the course of this half of the year, and profit sharing from the 3 partners in Mount Marion will start from the July quarter, and so regular income for Neometals is coming in the form of its shareholder dividend from the Mount Marion operation from here on. We've recently bought Mount Edwards lithium project. Mount Edwards is located adjacent to the Mount Marion project, and you can see on the On the left-hand side diagram, there's about 5 kilometres between the northern tenements of Mount Edwards and the southern tenements of Mount Marion. Mount Edwards has been drilled since the 1970s, starting with Western Mining Corporation, and there are significant lithium prospects there. We have a drilling program under planning now that will be executed in the second half of this year, and we're looking to prove up an initial resource at Mount Edwards that will be then developed through mineralogy testing and process testing with a view to supplying lithium hydroxide production. On the right-hand diagram on this page, all of those little red ink blots are actually outcropping pegmatites, and we've walked the ground and found a lot of lithium in the pegmatites. So they're our first focus for drilling. Our downstream production is based in Kalgoorlie. It shortens the transport distance for the concentrates from what is now a very long transport down to the coast and up to China to about half an hour's drive. That also cuts a lot of cost out of the operation, which is designed to make our lithium hydroxide project very competitive. Lithium hydroxide is required by the type of batteries that are being put into cars and stationary storage, the so-called NMC batteries, and that's the focus for our development due to the rapid increase in demand and also due to the fairly low install capacity now. But as I said, one of our key focuses is on shareholder value, and specifically with this project, minimising risk through process development and minimising cost to increase the security of the operation over the long term and over several pricing cycles. By basing in Australia rather than in China, we can take a significant amount of production cost out of each unit. Our development timeline on that is that the FEED study has just been approved by the board. We'll be executing FEED study and feasibility study through to the end of this year and asking the board for an investment decision in the first quarter of next year, with planned commissioning at the start of 2021 and production from there on. Our strategy for growth in our lithium income is based on Mount Marion. There are a couple of phases in production in Mount Marion to remove a discount based on a lower grade concentrate now that will be in place for increased revenue from the start of next year. Mount Marion will be expanded in capacity within about 12 months after that. Mount Edwards, I'd estimate maybe a 5-year timeline through to concentrate production, and that would be in time to support an expansion in production from the proposed plant at Kalgoorlie. Lithium battery recycling is our other plank in adding value to lithium materials, taking lithium batteries and specifically the consumer batteries that are available now, recovering cobalt and lithium from them through a modular process based on small-scale operation that can be scaled up later to accommodate the more complex demands of the car batteries. That will be piloted over the coming few months, and we're then looking to take it into design late this year. And then finally, the Barrambie titanium project, located out to the east of Mount Magnet. It's a huge deposit, hard rock titanium. We've developed a process that will be piloted in the second half of this year to convert that hard rock titanium into a very low-cost titanium dioxide. That will improve the position on the cost curve from what is currently, just on this graph, very thin margins for titanium dioxide producers through to operating costs that are probably a third of what they are now, and provide a very sound investment proposition in titanium. So I just conclude by saying that as an investment proposition, we have current earnings in lithium, we have near-term expansion in earnings from Mount Marion, expansion in earnings over the 3-year horizon for the lithium hydroxide project, recycling to come after that, and titanium probably earnings in the 5-year plus timeline. So we have several re-rating events potentially in the company and solid earnings growth based on our portfolio of projects. So thanks very much for coming along.